Let's talk about Trump's tariffs. He's over in I think Scotland right now.
Was it Stockholm? I thought he's in
No,
Stockholm.
no. Like Ireland. He's in Ireland.
He's in Ireland?
Yeah.
All right.
So they finalized that EU deal.
Yes.
That's done. And then he said that he's looking at broad range, like final. I think it's like 15 global. He's looking at the global tariff. So the tariff thing is the conversation that just never goes away. So how do we feel about the EU situation and his thoughts on potentially just having a flat rate tariff for the whole world?
I think the EU tariff situation is kind of been baked into the market. I feel like there hasn't been an excitement or a disappointment when it comes to tariffs anymore, just because of how much the news has come in when we're going to delay it, we're going to extend it, we're going to, right, this is the final date, and then it gets extended again. We saw it happen in April, obviously, pulled back, and then we saw some of the news of the excitement when, hey, we've come to the table with China. That's the real trade talk we need to have, right? Which is they're in Stockholm. The president, yes, was in Ireland, but the rest of the administration is in Stockholm trying to talk to China.
And some of y'all got Stockholm syndrome.
That's a whole nother. Why, man?
Well timed though, but go ahead, Troy. You got it.
So even the news was announced this weekend, right? You would have thought when the markets opened today, we probably would have saw the Dow rise. We would have saw all of the indexes rise. We kind of didn't see that, even though this is big news. When we talked about companies like ASML, we saw them rise today because them being a European company, obviously how tariffs could affect it if it was 30%, what that meant to the semiconductor space. And it was kind of like a lackluster response. It wasn't a great response. It wasn't a negative response. It was kind of like, okay, right? Like people are just kind of getting used to this idea of like, hey, if the tariffs are going to be in place, let's see how we maneuver. Let's see how our bottom line is going to be affected. And let's go on with business.
Yeah, I think all the concerns around tariffs are priced in, given that things may change, sentiment may change. His sentiment with the country may change. It doesn't have the same effect that it did in April. I think it's priced in, and I think most companies know and most investors know someone's going to waffle on the agreement, and it's a non-factor. And that's why I say, regardless of wars, famine, World War III, Gulf War, trade agreements, Brexit, like the great companies are going to find a way to reinvent themselves to continuously go up. And that's why it's important to hold. Because I even know people who was like, well, I'm going to build a tariff trading strategy. I'm like, it doesn't, outside of April that week, unless you were going long when the market bottomed out that first week of April, the strategy doesn't even matter anymore. Like we've hit past all, like we have to readjust the S&P target for end of year higher. No one gives a damn about the tariffs.
Oppenheimer just raised their year-end target to 7,100.
Yep.
Right. When you think about the only sector, and when we were talking about what should we do in terms of tariffs, that really just took off was defense tech. And we've been big on defense tech for the past year when we talked about Palantir coming into the year. But defense tech has been great and it's still great. Yeah. So if you had like a popular strategy or you were trying to short anything,
mistake.
And
historically, it's a mistake to short the stock market, because what you're saying is that my capital, however much, is going to outperform pension funds, fund of funds, mutual funds, and index funds long term. There's trillions of dollars going in when majority of funds, this is really important to know, majority of funds are long only funds, meaning they're betting on the asset going higher. Burry gets a lot of credit for the big short. It was 515%. That was amazing back then. If I do 515% in a quarter, I am pissed. You're going the wrong way. Put in chat, hold for the long term. That's all that crystal ball broke. I'm like, bro, I was free when I got here. Like, let's stop arguing. The goal should be 10,000% in 10,000 shares. All the conjecture, all that potting and live streaming, that shit don't pay no, except Joe. This shit don't pay no money. All the money is in the holding the asset. The real gatekeeping is you not holding for 5 to 10 years. That's the real gatekeep. Will you hold an even creators or those who are in the creator economy? What should I invest in? Apple and Google, who owns YouTube. There's nothing else to invest in until Twitch or whoever, Eddie and Ross want them to go public. Until then, Apple and Google. There's nothing fucking else to buy. Hold for the long term.